Welcome to our channel, WSN Academy, where we talk about all things staffing. Today we will be talking about finding money for your existing medical staffing agency to cover your invoices and pay your employees. Financing options once available to small businesses have begun to dwindle with the rise of mergers and acquisitions between financial institutions. The standards required to qualify are so strict that securing a business loan to finance your medical staffing agency is impossible. Factoring is the birth child of the regulatory medium designed by banks to decrease and avoid high-risk loans. Commercial banks are not internally structured to handle the dynamic nature of the medical staffing industry. Factoring has provided accounts receivable financing for small and medium-sized medical staffing agencies. Factoring is the product of banks' inability to provide loans for small businesses. What is the difference between factoring and banks is? Banks provide loans based on your history, creditworthiness, and ability to make payments. You are expected to make monthly payments on your loan on good times and bad. Factoring usually only require proof of clients' accounts receivables in order to receive funding. Here is how factoring works. Number 1. Your invoices are recognized as immediate asset. Number 2. The invoices are verified to advance funding. Number 3. Usually between 60% to 90% of invoice value can be advanced. Number 4. Funding can be provided the same day. Number 5. Certain percentage of the invoice is kept until you pay the amount owed. Here is an example breaking down a typical factor. Number 1. Factor amount of $2,000. Number 2. You will typically get a 90% advance or $1,800. Number 3. 10% held in reserve. Number 4. Once invoice is paid, the following occurs. Number 5. 3% transaction settles with a $60 fee. Number 6. Withdraw account balance of $140. This is your money. Number 7. The cost of borrowing $2,000 to cover your invoice is only $60, plus the processing fee. Factoring is a viable alternative to securing loans to cover your invoices. Why is this important? The medical facilities are notorious for paying invoices on net 60, net 90, and at times net 120. If you are a new company providing staffing to various facilities, it would not be impossible to accumulate a $50,000 payroll debt before you even get paid from these facilities. Factoring is a respected alternative that is widely used and accepted in the medical staffing industry. This form of financing can help your medical staffing agency from dying a horrible death from an inability to cover your invoices. This is a fact that many starting a medical staffing agency are not aware of and are not totally aware that this can happen. There are many other factors that can deal a heavy blow when starting a medical staffing agency. The above is just one example. My primary role has been to help new and existing medical staffing agencies avoid the hidden industry mistakes. I hope you have enjoyed this video. Please like, share, and subscribe for more staffing insights. Let us know in the comments which staffing topics you would like us to cover next. Until next time, to your staffing success.